This is the MTPredictor weekly market update for April 14th. So let's pick up kind of where we left off last week. We'll look at the futures in the Dow here on the right, the S&P, and then the Nasdaq on the left. Backdrop or what's going on or what's coming up. Obviously, we've got the tax season deadline there. April 15th, of course, unless you file an extension. That hits tomorrow, and then we've got a earnings season here upon us, and we've got the options expiration. So markets do like to rally. Usually 7 out of 10 times markets will rally into that options expiration and earnings as well. And so we'll see if this continues. Let's kind of take a look at. Of course, we also had the big drops in gold and silver prices. We'll take a look at that in a bit. So let's just start. I'll start with the Dow here on the right. Again, the weekly chart here. We are into this major weekly decision point resistance. Now it's a pretty good size area, almost all the way up to 16,000. So it's got a lot of room to move here. 15,000 is a nice round number resistance. So we're in that level. Now we do have strength here on the STF, which tells us that there may be more upside ahead. Similar to like in this area where the STF got into this gray band at the top here. At this point, it was telling us there may be more upside ahead. And especially, it doesn't mean we can't correct here. If this STF still stays strong while we get a correction, it usually means that this or pullback would be shallow and that we would potentially see new highs. So we're in an area again where we could correct. Certainly got to be vigilant about protecting long side positions. The Dow is in a major resistance area. It's a big area, and if we look, we've looked at this before. Here's that overall broadening pattern. This is the Dow. I think it's a 25-year chart, and you can see the broadening formation here, which is typically a topping pattern. But you see the trend line here extends. You know, the next trend line resistance wouldn't hit till around that 16,000. So certainly have room to move from that standpoint, and we'll see how that finishes out. The S&P here is a little different picture because it's just now moving out of the, remember that 1520 to 1560 area. It's taken a while. We finally got a good clear close above that area. They'd have to take out the high here, which will be 1593. Then obviously 1600 is right behind that. But here's your next level. If they can get through that 1600, this 1650 area, 50-55 area is your next major resistance in the S&P. So as the Dow is into this, basically this level, and it's on its chart, the S&P is got some room to move to the upside before it hits that resistance. Again, the unbalanced volume needs to pick up because right now it's kind of consolidating. We'll want to see that if the market is going to make new highs. We want to see that agree and follow. If we get that divergence, then we've got to be careful. Again, we should already be careful. You know, from that 1520 area to 1560, that told us that we need to be cautious to the long side in terms of potential correction and protect yourself in those positions. Now the NQ, remember, there was the laggard. The NQ was in, was stuck for a long time in this wave 2, potential wave 2 area. And we said the danger was if they didn't get out of that wave 2 area to the upside, the danger was, the move would be to the downside, and typically a big move. So they did, remember, close above that area, and the number I gave you that they would need to take out, that 2817 to the upside, would tell us we should get a test then of this level, which we did. We basically got last week. So a high there of 28.58.50, the high on this prior DP or wave 5 high here at 28.62. So what I think, what would be nice and neat if I take a decision point off of this which was that wave 5 pattern, that all the markets had the same pattern and they all went on to new highs, the Russell, the YM, the S&P, with the exception of the NQ. Well, now we finally got a test of this wave 5 high. Next, I think if we can get around this 2900, 2910 area is going to be this decision point resistance. If we can get the S&P into its resistance, get the NQ into this area resistance, and then the YM will still be inside its major resistance area, then for the first time we'd have all these markets in a major resistance area. And with all that in agreement, maybe we can get the market to to correct. So regardless of what you think of what's driving the market, or obviously the trend is up. We don't want to fight the Fed. We do want to be careful when we come up into these areas, these potentially major resistance areas, that the markets could sell off or could correct at those points. So not saying the sky is falling, just saying when we hit those levels, especially if we can for the first time in a while get all those levels, all the markets into their resistance levels together, that's typically when the movements are much better, when they're all moving together. So we'll see if that transpires. Again, just be cautious to the long side. Does look like we have more potential upside ahead. Doesn't mean that we can't correct, because the Dow is in an area where it certainly could correct. The S&P, if it can take out the number I gave you there, that high of last week, would point us to that 1650 level. Then that would be in resistance. The Dow would be in its resistance, and the NQ would probably be edging its way up. Again, we can look at Apple, because obviously the Nasdaq moving higher should help Apple and vice versa. So we had that 5-wave pattern here on the weekly chart of Apple. This did correct back to its wave 4 DP, which is typical. And then we call it a decision point area because the market needs to make a decision here. If this holds as resistance, if the Apple can get back above 500, the tendency is the trend here should continue up. The trend which was up prior should continue up. But the fact that we've closed below that decision point area, they've traded below it, is a warning sign. And that warning sign is that what tends to happen then is they wipe out this whole 5-wave pattern up to the downside. So we can check out the top of wave 1 here and go back to the bottom of wave 1, take our decision point tool, and it gives us the next level that if Apple doesn't get back above that $500 level and hold it, then we could see this $260 level instead. If we look at the daily chart, we can see that we did get a buy signal. Remember, we pointed that out here. It's against obviously the trend was down here, but this decision point, again, these DPs look for market tops and bottoms, turning points in the market, if you will, was coincided with this 5-wave pattern down. And so in terms of Elliott wave, it's saying it's due for a correction. Well, we got somewhat of a correction, but that correction is typically back to this wave 4 decision point, as we looked at on the weekly chart. And that again would put it above that $500 level. So it still needs to, it broke the daily trend line here, which was a positive, came back and tested it, and it's moved higher off of that, which is positive, but it's still really kind of lagging. So we'll see if the NQ gets going, maybe brings a little life back to Apple here. Otherwise, like I said, from the standpoint of the weekly chart, could be in some trouble there. We've got to keep an eye on that. All right, let's take a look at, this is the one everybody's been talking about all week, or at least the end of the week, which was the big drop in gold and silver we'll look at. And we looked at this pattern before, the descending triangle here, which I told you typically the breaks in this are to the downside, because you're getting at the top end, you're getting the price holding the bottom, the base of the triangle here, but the highs are lower highs, and that forms that descending triangle, and typically that breaks to the downside. Not always. So we got that breakdown below 1500, and kind of below these prior areas where the market was then bid up. But we're still inside this channel I drew, I think last week. This area was an area of demand, and that's where the price shot out of there. And so we're really in there. Here's your 200 period moving average. We haven't even reached that yet. That'd be down around 1400. And as you see in the crash of 2008, when gold got smashed, they brought it down to the 200 period moving average, and it was a major buying opportunity there. So the interesting thing that's happening in gold and silver is there's now a divergence between the paper gold and silver markets, your SLV and your GLD, the futures markets, and the actual physical, the bullion, the bars, and all those things. Because what dealers are seeing, and some of the dealers that I purchased through are telling us that the demand for the physical gold and silver is like 50 to 1. So they're seeing buyers 50 times the sellers, and so there's this great divergence that it's being created, and they're afraid that if the prices drop, they're already seeing shortages in some of the products, and if the prices drop, let's say silver drops to $20 to $15 to $20, which I told you in the past, that is definitely a possibility, that it could make the shortages even worse, where you can try to purchase gold or silver, the physical, and not be able to take delivery for weeks or months. So it's an interesting, and we talked about this before. If the Fed is openly manipulating the bond markets and interest rates, then certainly they will probably be doing that with gold as it competes against the dollar, and they need to control it. And that's probably why we've had such a controlled rise going back to 2001, a nice controlled bull market here, and when it kind of spiked up, they kind of gained control back of it, because they can't let this get out of control and undo all the work they're doing, keeping artificially low interest rates and so forth. Okay, another thing we can look at in this chart, I think, is courtesy of the short side of long.blogspot.com. This just points out the silver shorts at the highest level in almost 2 decades, and when that happens, you see that's the red line chart there. That is typically where we find bottoms, near bottoms in this case silver here. This is the commitment of traders. So the short positions at peaks tends to be bottoms in the physical, or the COMEX silver, and you can see this is the level that we're at now. So another interesting chart. So we'll see how this gets. Doesn't mean that the bottom is in as of Friday, but certainly we've seen this happen before. Like I said, we haven't even gotten to the 200 period moving average like we did in 2008. We saw what happened there, and certainly we could go beyond that. The Goldman Sachs, of course, put out the word to their clients. Basically, they knew that there was going to be an orchestrated takedown of gold and silver, and warned their clients. But I think they put 1,200 on the level there. But I guess you have to kind of take Goldman Sachs' word with a grain of salt, because they were also selling their clients mortgages. They were having their clients buy mortgages as they were short selling them. So I don't know how much I would put stock I would put in Goldman Sachs if you haven't learned that lesson. So basically, I don't see anything fundamentally has changed in gold and silver. The demand there is for the physical, the papers, maybe paper shorts, selling, and they'll continue to do that. But at some point, that divergence is going to get resolved between the paper and the physical. And so I guess the picture for me hasn't changed in this. Again, buying gold and silver is not really an investment. It doesn't pay you dividends. It doesn't, you have to pay to store it. So what it does is it's a hedge against central banks, against governments, reckless government, we should say. And I don't see that's changed. I think, Cyprus, teaches us it was basically a test. And to see if there was a slight uproar when the confiscation or the idea of confiscating people's wealth, the banks just literally going in and calling it a tax, but basically confiscating people's wealth, and they got away with it. And so I guess that test was successful, and we'll see. It may be coming to a country near you. So anyway, long story short, I don't see that the picture for these markets has changed. Price is going to do what it's going to do, but as long as they're printing the money worldwide, and it's interesting that Greenspan tried to inflate, when the tech bubble crashed, they tried to reinflate it and by accident created a real estate bubble. And now that the real estate bubble popped, Bernanke has come in and he's trying to keep the interest rates low and trying to get real estate back. And as a side effect has created a stock market bubble again. So if you look at the S&P though, going back to 2000, it's up like 2%. If you look at gold, it's up over 400, in some cases, depending on when you bought it, 400 or 500% since 2000. So you don't find too many charts that that look like this over the last 10, 12 years. So like I said, I wouldn't get too excited. I think these markets are going to do what they're going to do, but the underlying reason why you would purchase gold and silver long term, I'm not talking just a trade, is still intact. So by covering gold, we pretty much covered silver as well, but let's just look at the euro, US dollar. And I'm kind of overrunning a bit, but I did want to touch on these because remember, the weekly is short here on the euro. And targets down there at 1832. Again, you can have those that are potentially short this have their stop moved to the entry for a break-even or a risk-free trade at this point, as we've achieved the 100% initial risk line. And we'll see. Might get a little head and shoulders top if we get a right-hand shoulder here. We'll have a neckline, so we'll see how that plays out. But then, of course, the dollar gave back a little bit here this week, but again, this was the major low, and the target there still out there, 85, just above 85 there. All right, so we'll see how this finishes out after the euro is kind of correcting back. We'll see if it rolls over again, and if it does, if we get another leg down there, then we should get the dollar close to that $85 target, if not to it. All right, so kind of covered a lot of ground here. We'll wrap it up. Just keep in mind, earnings season, options expiration on Friday, so go easy then. And we'll take a look and see how things look next week. All right, have a great rest of your trading week.